quickly take stock of what the market is up to and then we'll move forward. About 0.5% uptick, 14,600, better strength for the broader markets. But let me also welcome on board Pranav Amin, the MD at Alembic Pharmaceuticals, and try and analyze how their quarter went by was. Pranav, tell us about the US business, which has been down on a sequential basis, looking at the kind of impact that we've seen for valsartan and how it's going to really impact the US growth going forward for you.
You know what, our US business, our strategy has been quite, we've been quite clear that, we see a lot of disruptions in the US market over a period of time. And we like to capture these by having a robust supply chain. And that strategy has worked very well for us on the back of this sartan shortage. For the last 2.5 years, we've been pretty well on the sartan side. And if you see a US business over a 5-year period, not taking this year, we've got a CAGR of almost 45%. So that's quite a remarkable growth. So the strategy has paid off for us. Having said that, yes, on the sartans, we've seen this erosion. Having said that, rest of the products is where we've been pretty okay, and there hasn't been any issue there.
Pranav, domestic sales were down about 14%. If we take a look at the Q&Q number, how are you expecting numbers to be going forward on the domestic front? Do you see double-digit growth with key specialty brands?
So the domestic business actually has grown by 5%. It grew by 5% in the quarter as well as the year. As you know, the domestic side of the business was more affected due to COVID because of the doctors and the MRs going to the doctors. So that's what we took a hit. Where we are happy about the domestic is our specialty side is gaining quite a bit of traction. So a gynec, cardio, diabetology, ortho, some of these divisions have been doing pretty well over the last quarter or two. So very happy about that. And as regards the acute space, azithral is where we saw a massive jump last year in the first half of the year. And now again, for the last month and a half, we've seen a lot of ramp up in azithromycin because of COVID.
Okay, now strong performance in the API as well as the non-US formulation business coming in. Does this mean that Alembic is now clearly diversified, from really being just a mere shortage beneficiary?
So, yeah, I think, you have to look at it into two perspectives. One, you said, is the shortage benefit. So that is one aspect of the US business. The other aspect of the steady business, which we continue doing. The second is more opportunistic, as you can see, is when we can ramp up. But let's take the other two businesses as well. API business has grown by 35% this year, which has been a phenomenal growth for it. It's almost 1,000 crore business for us, and they've done a good job. Again, it started with the first half of the year where there were a lot of disruptions from China. But apart from that, we've also built up good business for the second half of the year. We continued that momentum and we grew by 35%. So API business is doing well. I expect it to grow by 10% at least year on year moving forward. The EROW is where we saw tremendous growth of 57%. And for us, the EROW is pretty much just Australia, Europe, and Canada. And we work through partners there, and they've got very good business. Excuse me, and we've been able to grow pretty well. One of the reasons also is that the last 2 years, FY19 and FY20, were both quite tame for these two markets. Our growth was quite muted. Hence, the growth in that light seems much higher. But having said that, I expect these two markets to continue growing at about 10 to 15% for the next year or two at least.
Now, do you remain confident of achieving a US top line in excess of $400 million by FY24, with most investment blocks for driving medium-term growth in the US already seemingly in place? So,
this was actually in response to a question that someone said that we've had this massive capex program plus R&D. We have one of the highest as a percentage R&D spends in the industry. And someone asked us that with all this, where do we expect? So I said, with these kind of investments, I can expect that the US should go to about 400 odd million in terms of revenue. So I think it still stands. I think a couple of quarters here and there, maybe FY24, FY25 is when we will get close to these kind of numbers. That still stands.
Now, the company as well over the years has made quite a few investments. Do you see the benefits of that leading to growth in the US markets?
So I don't think we've seen any change in demand due to COVID, at least from our portfolio. We haven't seen any change in demand. But the whole question is that, as I mentioned, that the US business, and if you see this year, for the last 5 years, the growth is CAGR of about 25% is pretty good. And we expect that long term also, we should grow the US business. It's a massive opportunity. But we were lacking in capability. That's why we said that we must get into investment in some of these new areas, so which was oncology, injectables, derm, ophthalmic. And of course, with the business growing, we were short of API capacity as well. So as a combination, that's what led to these investments. As and when these facilities get commercialized in the next year and a half or so, we will start seeing benefits from them as well.
Okay. On the API shortage front as well, does China plus one mean that a lot will be staying back going forward, from the demand surge that we've seen in these businesses?
Yeah, I believe so. I think you got to. I look at API business in two separate buckets. One is you got to see where everyone talks about China and the erosion and the pricing, right? And the other one I see is increasingly all the other international markets also moving to a higher level of regulation. And once that happens, they want a supplier who can withstand the audits, whose intermediate plants or whose intermediate suppliers can withstand an audit, whose documentation is good, whose quality is good, supply chain is good. And if you can do that, that is a big difference in between yours and the Chinese pricing as well. And that's a segment that we are catering to. So a lot of our customers do stick with us because they're happy with our quality levels and the documentation that they.
Sure. Now, in terms of inspections by the FDA, when do you expect them? And, while they've stopped for a moment for a company like you, where you've made certain investments and you need those clearances, for growth, when are the kind of timelines or expectations you have that they'll resume?
So if you look at our facilities, right, new investments that we made, one is a derm facility, which is Allure, which is already commercialized. FDA has already visited 2 or 3 times, so it's already commercialized. There's no issues there. Our OSD, we have a new OSD facility, which is not mission critical for us right now. That is just an additional capacity and a de-risk from our existing facility. So that's not mission critical for us right now. Our most important one was F3, which is the largest investment as well, which is what we call the general injectable facility, which has vials, PFS, as well as ophthalmic line. So that's the most important, and that's the one that the FDA has come for an audit physically, and they've given us some observations, and we're responding to them, and we've already responded to them, and we're in a discussion with them on the way forward. So I think we should be okay for that. The other one is the oncology facility, where we will be filing our first injectable oncology in the next couple of months.
Okay. Now, you had one inspection in the Jan-Feb period where, it's the same large injectable facility you spoke about, I think, and you can correct me there. But will that drive growth in the future, according to you?
Yeah, in the future, that's where bulk of our injectable launches will come from. It's got 3 lines. We're going to put 3 more, some long-acting injectables, some complex products. So it's an interesting area, and some of the R&D investments are also in that area.
Where do you see Indian pharma in the post-COVID world? It's been quite a significant shift when it comes to Indian pharma, over the last year or so. What's your outlook?
So I don't really feel that COVID has made much of a difference in terms of how we are viewed and what we are doing. I think Indian pharma has already come leaps and bounds, and that's why people always refer to it as the pharmacy of the world. We do manufacturing for most of the countries. So I don't think COVID will make much of a difference. I think what may come out of COVID is hopefully we'll see more companies doing research, more new research, more NC kind of research, getting new molecules out. I think hopefully that should happen after this.